since I could hold my head up high. And it's been a while since I first saw you. And it's been a while since I can stand on my own 2 feet again. And it's been a while since I could call you. Consequences that are rendered. I stretched myself beyond my means. Hey, it's Soleil, and this is episode 601 of the Orange Pill Investor. Give me a second to get my AirPods connected. Hopefully that didn't sound like shit, because that was the laptop audio. There we go. Are those a strategy? Those are the ones you just keep buying back. They keep getting assigned and you keep buying them, selling them back again. All right, so it's been a while since I could filter, just zoom in on like today's move and have a nice green candle. So that's nice. The weekly looks fucking amazing. The month is not bad. 3 months is break even. Holy shit. When was the last time a 3 month was break even? This is like year to date, we're actually up. Okay, the yearly sucks. But the 5 years back to good shit. Bitcoin is only up 30% for 5 years. Huh. Treasury up 120%. All right, so that like 1x MNAV, I mean, I guess we're only up to like 1.1 or 1.2 or something now. I saw somebody mention it on X. It's been a while since this looked this good, but you know, keep in mind, this is just this is still a small reversal of this fucking channel here. So we need to clear, like before we get too ahead of ourselves, like 150 has to be the floor before we can consider, 200. Now, if we get to 190, the market loves to push shit to whole numbers. So I would love to see this get pushed to 190 and then up to 200. Probably get some kind of correction by then. I'm sure there's a bunch of people that would be more than happy to get out of some of their position at 200. So that could be a difficult number to kind of clear. And like right before the meteoric rise, I mean, this is a long way to go back to look for support and resistance, but that support number is around 200 to 230. So wouldn't be surprised if that was hard to penetrate, or even this 255. Anybody who bought this dip and was too much of a pussy to sell here, or thought it was going to 1,000 or whatever, and then rode this round trip up and then at a 50% loss, might be desperate to get out at like 250 if they can't handle this roller coaster. So just keep in mind, like everybody's not, doesn't have as much conviction as everyone else in the market. So you can't just pretend everyone thinks like you do. You have to be prepared for other people to have their own incentives and their own, I guess, technically rational or irrational incentives. I'm getting wrecked on all of my covered calls, every single one of them. And like, I'd be lying if I'm like, oh, damn, if I didn't have that, I'd have like an extra 30 grand or whatever. But I've never been more relieved to just get bent over on these positions because strategy at sub 150 is way too close to strategy sub 100, right? If Bitcoin wasn't doing what it's doing, and instead we were down here pushing 60 instead of 80, and strategy was like trying to go to 75, I might be eating like Franks and beans and shit. And I don't mind ground beef. I enjoy ground beef, but I also enjoy ribeye, and I'd rather not have to start eating out of a can. So for me personally, unfortunately, not going broke was more important than catching all of the upside. Everyone's trades and portfolio will look different. But this, like being able to sell covered calls with strategy over 150, just feels so much better. Now it's going to cost me a pretty penny to dig out of this hole. I already rolled because there was no extrinsic value left. I already rolled these yesterday. Yeah, yesterday. And I was like, let me roll up to the 140 from 131, give myself a little bit of breathing room. And then, of course, overnight, this shit rips another, was it $15 a share, at least? And, so do I roll these again? The difference between like a rational roll and a panic roll is there meaningful extrinsic value left in this position? If there is, I don't touch it. If there isn't, then I do something with it. I either close it, or if I don't want to close the position, I roll it. The way you figure out how much extrinsic value on an in the money call or in the money option is subtract the strike from the price, subtract that number from the option's value, which is the intrinsic value, and what's left over would be the extrinsic value. So 140 from 167 is 27. Holy shit, there's nothing left. Is that right? Yeah, because this is already 96 delta. So unfortunately, I'm in the position of having to roll this again and making some room for some extrinsic value here, because for there to be like 50 cents of extrinsic value to hold this for a whole week doesn't make any sense. So let me go ahead and just do this, and then, well, we can talk about the ways that I could do this. I could simply close one position. That would give me 13 grand, right? Let 100 shares get called away, basically. That's one way to do it. But how much am I going to have to come up with? Yeah, this is going to cost me like 30 grand to roll these, potentially. Let's try to roll the strikes up. And let's see how far I have to go to get some extrinsic value. 150 is a nice whole number. 167 minus 150 is 17. That would give me about $200 worth of extrinsic value, which is a little over 1% of strategy's price. In a week, that's not terrible. So that would actually only cost me 8 grand. I wonder if I can get away with going a little bit less. Let's see what 145 looks like. The bid-ask spread is not great there, so that's like $2 wide. 150 is a little bit heavier traded, so it's about $1 wide. So, and this is like pretty close to the expected move as well. So I think this is probably my best case. I'm gonna try to get away with paying a little bit less than this, but I don't think it's going to work. I don't think this is going to go through. Yeah, no insta-fill. All right, let me just keep bumping this up a little bit at a time. Okay, cool. What did that cost me? I'm 10 grand into margin again. So if I do let one position get called away, with shares, then that would cover it. So I got to come up with 10 grand. Now, I don't have to do this all within strategy. If Tesla was also running, which Tesla's not doing bad, I could potentially take off. Actually, I think this would give me buying power, but the way that this fits in with margin is kind of weird. This would actually cost me some cash, but give me a bunch of options buying power, so that's not helpful. I could get a little bit of cash here. These really aren't worth much. 350 bucks. I was worth about 400 bucks. So Tesla not very helpful in that scenario. Are any of these positions? So these two positions are in profit. They're about, let's see, 10%, 20% profit. Now, because they have so much time left on them, I would probably not sell these and close them directly. I would probably hedge them out. And I would kind of like turn this into a credit spread in a sense. That would allow me to not only kick the can down the road of paying the taxes on this position, but if I push it down to, let's see, days open, another 265 days, that puts it at long-term capital gains taxes. So that would be better. But also selling the option, I don't pay taxes on selling this position until I close it. And if I close that damn thing like a year from now, then I could end up paying, well, actually, I'm not sure about that. I don't know if you ever pay long-term capital gains tax on options that you sell. Regardless, I wouldn't have to pay the taxes, whatever they are, long or short, until I close that position. And keep in mind, this isn't financial or tax advice, but as far as the way that I understand it, that would kick the can down the road a whole entire calendar year. So that's cool. So just keep that an option. If I do hedge this out, I can get myself about $1,000 and not have to deal with paying the taxes on it in tax year 26. The roll until you're right finally came through like a champ. And so I could potentially close these out. This would cost me another 1,200 bucks. So I'd kind of be digging myself into a bigger hole here. But that's kind of the whole point. The whole point on this was to roll until I'm right, not roll until I'm right and then hold them for even longer so that strategy can crash back down to 130 and put these fucking things back in the money again. So before I forget, I'm just going to at least close one, just to keep myself honest. There was a guy that I really liked back in the day. I think he shut down his YouTube channel, but back when I was a degenerate crypto trader, he was using a lot of the stuff that he learned as a penny stock trader in basically shitcoin casino trading. And one of the things that he said was you always participate in the bounce. And what that means is anytime you're long and the position is a winner, the price is going up, you have to participate meaningfully in taking some profits. I know that doesn't make any sense to Bitcoiners because all we do is buy the dip and fucking hodl forever. There's no such thing as taking profits because selling Bitcoin for cash doesn't make any sense. Like you can sell Bitcoin to buy things that you enjoy, but just selling Bitcoin for cash doesn't make any sense. But this is the stock market. We've got third-party risks. We've got custodial risks. We've got tons of risks. So there's no such thing as just diamond hands in the stock market, in my opinion. So finally, I don't remember how long I had to roll these frickin' things. It's probably been months. I was finally able to, you know, I got paid 2,400 bucks to roll this out. I probably rolled it from like a $2,000 position. So that was only for like a $4 credit. So I can pretty much probably break even on that. And that was another thing that he said, like, if you can make a trade and break even, like, that's a winning trade. And the reason he would say that is because there's so many people that go broke in the stock market. Like, if you can break even, that means you probably fucked up the trade and figured out a way to, like, not lose money. Pat yourself on the back and call that a win. So I'm participating in the bounce here and unloading some of my long exposure here. So that's good. Now, what am I going to do to pay for this? When the price is running, I would probably want to unload some of my exposure to these poor man's covered calls. I could close. These aren't really ready to roll. So maybe I'll just close like 3 of these too, making an even 10, 30. Let's close 3. Just kind of reduce some of my exposure, because if this is short lived and the frickin' uh, you know, somebody in the Middle East who doesn't want peace to last, because American voters, American young people were not raised in the shadow of World War II. So that's like history book shit for them. They don't really the the shit that the country, the government of Israel has been able to get away with for the past 70 years only has about another 10 to 20 years left of like of their basically of their hall pass, being able to get away with whatever the fuck they want. So there's going to be this desperate push to get the United States to do everything that they need to get done or want to get done, because when the 20-year-olds of today are 30 and 40, like there's no more sending Americans to the Middle East to die, right? So they got to get what they can now. I can't imagine that there won't be some kind of uh, false flag attack to destroy the ceasefire, or to just sabotage all the peace talks. Uh, and whatever your chances you think that happening, you have to build that into your portfolio, right? The Strait of Hormuz is open. Maybe that's why everything's running. Okay, super. But the shit was open not too long ago, and then it was closed, and now it's open. It can be closed on a moment's notice. So all that to say, nobody knows what the fuck is going to happen. I want Bitcoin to run to 250, and I want strategy to go to 1,000, but that shit's not happening tomorrow. So anyway, there's a ton of risk in the stock market that doesn't exist with your sats in cold storage. So participating in the bounce, I think, is other wise words from my boy Quick Hands Luke. So when this is running, the most efficient place for me to go to get to pay for this would be some leverage. So maybe I take this off. Now, granted, I'm going to lose 1,700 here. And this looks like, actually, damn, Stretchy's fallen a little bit. So this was down a couple of bucks just since this morning. I think this was worth like 68 just 30 minutes ago or an hour ago. But I can close this, collect $4,000, but I would need to come up with a little bit more. Or maybe I just bite the bullet and sell some shares. No, let's dump this one for now. All right, that gets me a little closer. I could actually add add some cipher positions, but I already added a bunch to pay for the roll that I did just yesterday. All right, so with what I have left here, I could, let's see what I can roll this out for. That's within the expected move. That's just a couple $100, but let's do that. Wait, is it ready to roll? Time-wise, yes. Maybe if we get lucky and 150 shows some support. Let's do that. Oh, congrats, Sandeep. Let's see. Snave Night Van. So my 137 covered call's not looking great today, but I'm still hopeful. Hopeful. You're hoping the price comes back down under 137? What's your expiration date? I think that's, well, if all you got is hope, I guess you you got to hold on to it. Let's see here. Let me roll my calls before we hit 200, please. Short positions are always short-term cap gains. Yeah, thanks. Let's see. Wondering about what you think about using stretch as a source of steady income rather than selling derivatives. Um, yeah, if I didn't enjoy this, I didn't want to do this anymore, and I didn't want to be in my portfolio and opening and closing. Eventually, maybe I'll have an AI agent doing all of this. Maybe it'll learn my style, and the AI agent will just present me with a set of actions, and I can like second sign them all and approve them or something. But yeah, I mean, if I just had what 5 million, 10% is like you could spend half a million a year, sure. But until then, um, there's so much more profit to be generated selling options. It's not even close. 12% annuals, 1% a month. Most of these positions I won't even take unless they can get me half to 1% a week, let alone a month. But yeah, I mean, once you trade an account up to a certain size, you want to press the easy button. That's it's perfectly fine if the trade-off is your time. I just got off some strategy 175 calls expiring today for 57. Try to pay for cocktails this evening. Nice. Are those 10 deltas when you put them on? What's up, Green Money? Let's see. At all tells you're not getting the strategy upside or downside holding stretch. Also capping your income at 1% a month. Yeah. Oh shit. Uh yeah, you've probably only got about an hour or two before they get exercised. So probably have to make a decision. Let's see. No congrats. Sold them for 57. Now they're a dollar. Well, wait, what strikes? The 175s? Holy shit. Um, yeah, my bad. I was thinking you sold them like a month ago. Do you think Bitcoin is about to shoot back to 100? I try not to think those things one way or the other, but no, not really. I think there's going to be a ton of fake outs. Even hitting 100 is going to do nothing but get people to FOMO again and like, oh, if it goes to 100, then it's going to go to 125 and it's going to go to 150 and blah, blah, blah. But um, the market loves to just liquidate people. So all of the people that were leveraged short are getting liquidated right now. And once they're done taking all those people's money, they will crash it 10 to 20% again. And I mean, just here we went from 65 to 75. We're so back. And then it dropped 10 grand. No, it was 9 grand. Yeah. Dropped nine grand again. So, even if we push to 90, we'll have a correction and a bunch of people longs will get liquidated and the shorts will get liquidated and like it just doesn't go anyone's way all the time. As far as, well, here's the thing too. So if US midterms are in November, if they need 6 months potentially to really pump the market, then that's no later than May. And isn't the Fed, when does the Fed get replaced? The Fed chair. When is Powell out? Is it a month or 2 months away? So there's a lot of shit that could happen. Um, so we get a new Fed person who may be more sympathetic to lowering rates, specifically because he's supposedly such a hard liner, like, oh no, I want higher rates. And it only just makes sense that you could bring someone in with that kind of history and he could say, oh no, we really do need to lower rates. But he really can't say that unless there's a reason to, which would be like, okay, the war picks up again, or there's cracks in the economy, which could be like the private equity market. There's tons of private equity that are heading for the doors, and the only reason why they haven't collapsed so far is they're gated and um, like people want their money back, and they're just like, no, we can only give you like 10% of it a month or whatever, and so that's kind of like halted some of the stampede. But in order to get lower rates and the Fed not feel like they're just being Trump's bitch, they probably need an excuse. So they're either going to need full blown war to justify printing money, or the S&P 500 has to shit the bed. Yeah. So, maybe this is a fake out and something happens to tank this to 650 or something, and then the Fed comes in and is like, we're lowering rates because of the market. We're totally not doing it because Trump said so. That, and in that sense, everybody gets what they want. Trump gets what he wants, lower rates. The Fed gets what they want, which is to maintain their ego. Um, Same thing as Trump's goal, really. Everyone's primary goal is to maintain their own egos throughout all of the basically the controlled detonation of the United States as a world superpower. I mean, I guess we're always going to be a superpower, but we'll just retreat to our hemisphere, and which I kind of think is a good thing. I just wish that we would have just packed up our shit and went home instead of getting a bunch of people killed on the way. But Okay, I got off on a little bit of a tangent there. Um, yeah, it was this one. Back to 100 grand. You know, it's going to go up and down, whether it goes to 100 and then back down to 80, or whether it goes to 125 and back down to 100. I try not to make too many short term predictions, but they don't really need to pump this early for midterms. So that's one catalyst that's kind of on the horizon. Trump and China meet in a month or two, right? For tariffs. We're going to finalize that. So that'll be bullish. So we probably really can't moon until that happens. What else? We got the spam war won't be resolved until September, October. So maybe this thing gets pumped and then maybe sell and May and go away kicks in like it's, tends to do every year. And a bunch of people get wrecked over the summer. I don't know. There's a whole lot of, I mean, we know the thing that Bitcoin should just be going up, right? Like Bitcoin is severely undervalued and it should be at 150, easy peasy. But whether the uncertainty will allow this to happen in the next month is anybody's guess. So I can't remember who said the quote, but it was something along the lines of there's two kinds of people who don't know what the price is going to do, and the people who don't know that they don't know. So, um, yeah, I really won't be changing too much of my strategy, except that a lot of what I was doing was basically because I hamstrung myself using margin. And so it's taken me like 6 months to dig myself out of this margin hole. And that's kind of what I'm in the process of doing right now. Do you think there's a bull trap like in all markets? It seems like this rally is strong. Well, yeah, I think that's the risk. So you have to kind of build your, like, I don't really do valuation models necessarily, but whatever you think the chance of it being a bull trap is, if you think it's a 20% chance it's a bull trap, then trade based on that. If you think it's 50-50, then maybe take that into consideration with, half your portfolio or whatever. But like to the extent like bull traps, like, okay, well, it's going to be a bull for some fixed amount of time before it corrects. So technically you could you could kind of like look at any rally as a bull trap, because when it ends, like, was that the trap? Like, I don't know. Or is it are you looking at bull trap as something that's engineered versus something that's organic? I don't know. I don't know how much the the super rich can manipulate these things, but it's not zero. True, great respect on liquidations. Thanks. And like, yeah, you're always gonna have people FOMOing on the way up and the bottom. So let's see, May 15th is that's the meeting. Is that the meeting for is that the meeting for Trump and China, or is that the new Fed? Do you follow gamma exposure? I follow some YouTubers that follow weekly gamma, and it seems to be a decently reliable indicator. No, I don't really follow much of anything. Um, I either trade 45 DTE around the expected move, or I'll just sell weeklies around the at the money, which has been a disaster the last 2 weeks. But that time of, a lot of times they'll describe that as gamma risk. And gamma risk really doesn't bother me as long as I'm selling a traditional covered call where I can back up the shares. But it sounds like what you're talking about is someone is using gamma as a technical indicator. And are they selecting strikes using something with gamma? I mean, yeah, obviously I don't know anything about it, what they're doing. All right, so I'm like halfway at chipping away at this thing. I got to come up with another 5 grand. I can hedge these out for 500 bucks each. That's another four. Or I could just take off all my leverage. This would get me the other 6 grand I need. And then, as much as I would love to be adding leveraged positions, because I still think strategy is undervalued, this would potentially give me some breathing room. Yeah, yeah. And that's kind of like the whole point of me carrying leverage is to protect myself to the upside. So I'm doing this before I think too hard about it. I don't like having no poor man's covered calls on because I like how efficient they are with capital. But holy shit, that was perfect. So that just gives me like breathing a sigh of relief. So I'm back to no margin use. Well, no official margin use. Technically, if I added up all of my positions and like if I added up like this is 11 grand times 2, so it's like 23, 44 and another 30, 70. There's 70 grand worth of collateral that I should be setting aside for these cash secure puts if the price went down and stayed down. But my dog is asleep on my foot. Um, Technically, I'm using margin still. So this is kind of fake. Like this number right here is only the amount of margin that I'm using, assuming that I don't get assigned on all of these cash secured puts and oops, and all of these 90 cash secured puts. So I'm still using leverage. I'm just not paying for it because my cash balance is over zero. So I can't even imagine how much margin I was using when some of it was actually showing up in this number. Um, so anyway, this still makes me feel better. I've been trying to dig myself out of this hole for like 6 months, and as much as I would love to just YOLO a bunch of long calls and poor man's covered calls, I'm gonna try to I'm gonna try to do this in a less irresponsibly long manner. All right, so I like that. I'm in a good spot. I Yeah, I'll just save these for a rainy day as some upside protection. I've got about let me just calc let me if I put this into a group, I can see the total delta here. So I've got about 40 delta in these long call positions, meaning this is the equivalent of holding about 42 shares. But the beauty of these, like some of these are still 1080s. Um, I cannot wait for a 1080 to go in the money. Like it's just gonna take like 2 or 3 years for that shit, but it's gonna be so sweet when it does. But yeah, this is basically like if I had 42 shares uncovered. But the beauty of these is as strategy's price goes higher, the delta actually increases. But when you own shares, the delta of the share stays, one share is one delta forever. Doesn't really matter. But based on why am I drawing a blank? Based on gamma. Sorry. Based on gamma, the delta is going to increase. And as the price goes up, gamma is also going to potentially increase um, as the um, as the price of the underlying approaches the uh, the stock price. There's going to be like a sweet spot of high gamma, probably what 10 to 20% out of the money in both directions around the price of the stock. So like right now, these 1080s are like 2 delta. But if the price were to rocket up to 500 a share, this delta is going to be way higher. And so, anyway, the whole point of these is to just prevent me from losing my shares, is the point. All right, so we'll see how long I have to roll until I'm right to dig myself out of this hole. We shall see. Now, the other benefit of this being down to like 2 grand, I could probably roll out to, let's roll. Okay, well, let me go to 43. Let's delete. If I rolled this, I could roll this up to 160 and break even, right? So I could dig myself, I could give myself another $10 of like breathing room. And maybe every couple of weeks, if strategy stays under 200, I might be able to catch up to this at some point. Like every couple of weeks, roll the strikes up another $5 or $10. So we'll see. Or I'll get completely whipsawed, and the 2 grand that I just paid for these will be for nothing because we're sitting at 130 in 2 weeks. That's the danger of the panic roll. Is you're like, oh shit, I don't want my shares called away. Let me pay this 2 grand to roll out of the money, and then 5 days later, the shit goes right back to where you sold it from. So try not to get whipsawed, if at all possible. All right, strategy's done. Cipher, I could maybe try to take a couple positions off. Yeah, these are half of what I sold them for. So let's, but I don't have much to play with. So I could roll some out for a credit and close the others. Let me roll 20 of them. See what I can get. Is the liquidity just shit out here? I think it is. Yeah, this is annoying. I thought for sure that one would fill. Maybe I need to. I'm already rolled to. All right, 5 more cents, and then 4 cents, and then I quit. Yeah, the liquidity is really sucking here. Let me cancel this. Let me start over. Let's just close 10. And then I'll see how many I need to roll to pay for that. And the liquidity on this one I'm trying to close seems like it kind of sucks too. It's not that bad. I don't know why I'm not getting fills here. What if the price is just moving too much? There we go. Okay. So now I'm another $1,000 in the hole. All right, so let's roll these other 20. All right, the bid-ask spread here is 40 cents wide. So I'm rolling a week and paying a debit. So not basically getting no credit for the time. That's dumb. All right, so maybe that was a mistake. Maybe I shouldn't have taken those off. Annoying. Tesla getting destroyed on that covered call. Could. It's a little too high. Man, this is a pain in the ass. All right, there we go. That should do it. That gives me 170 bucks. So, rolled those out, but I was able to take off 10 contracts. So I guess I exposed myself to a little bit more risk with a higher strike, but 10 less contracts. So I like that as well. This worked out. Sandeep says, okay, I'm up 30 bucks now on those calls. Better than 5 minutes ago. Yeah. Let's see. Tommy. Anyone else feel sick to their stomach with all their shares about to get called away? It's a first for me here. Wheel time versus buying back and losing 4 months of revenue. Hmm. Yeah, it is a, well, unfortunately, I guess I've been through this so many times that I'm numb to it. But in March of 2024, I had the 140 strikes. I guess it was probably the 1400 strikes back then because it was pre-split, and the price went to 170. So I actually lost 30 grand per contract, and it took me 10 contracts to lose that much for this move. So this is this is par for the course. Um, yeah, but I do sympathize. It does suck. I guess you kind of have to, I know, maybe keep an Excel spreadsheet, and if it looks like you would have done better just hodling and doing nothing, then I don't know. That might be the better alternative. For me personally, I have to live off of this income, so doing nothing really isn't an option. But if you support yourself with your W-2 job or whatever you do for a living, maybe the whole covered call game isn't even necessary. In that sense, it might be better to just be a sniper and bag hold through the dips, accumulate DCA, and then only sell covered calls after it runs up. Like the prospect of not having covered calls on right now and then selling is a lot easier to stomach. Selling the 200s for 800 bucks after the recovery, after the rally, that feels a lot better. But yeah, I don't know. Maybe I'm broken and dead inside from this happening so much. Jesus, losing again. Appreciate your thoughts. Yeah, you too. Appreciate you for the chats. I mean, if you want to try the roll until you're right thing, like let's just say, like I don't know what strikes you had. Yesterday I had the 131 strikes. So let me get back down here again. You can try to play the game of, right, like if these were expiring today, I could try to roll out to just high enough that I don't pay a wait, the other direction. Like roll as high as I possibly can, but like not pay a debit. And then every week or every month, whenever it comes close to your expiration date, try to just roll out and increase your strikes just a little bit at a time, little bit at a time. You could try to play that game. Like, actually, it might be better to look at that in the IRA. So I probably have to deal with this today. Or no, I already rolled. I don't know if I had any weeklies in the IRA. But yeah, you can try to roll out and up slightly. Like if you had the one, what did you say you had? 515 170s. Oh, you got plenty of time there. I mean, I don't want to make it sound trivial because this is scary, right? Your 170s were in the money today briefly. But 515, the expected move is anywhere from 145 to 195. So it could, don't worry, it could get worse. You could be looking at 195 strikes. However, as far as like a reasonable price, like anywhere between 140 and 200 is in play. So with that, like that's 28 days left. That's pretty. That's not even remotely panic zone. Like 50 deltas, there's plenty of room to move. And really, like if you're at 175 and you go to expiration, they're getting called away, right? So with the price going to 200 or 250 or 300, the prospects aren't really any worse. Like you're still getting them called away. Um, but yeah, so they're worth 1500 right now. And if you went out, let's see, 170s are 1500. You can get 1750, 1775-ish here. So you could probably roll, what did we say they were, 15? Yeah, you could roll up one strike. Like maybe every week or every 2 weeks, you can capture that extrinsic value and roll up like one strike to try to dig yourself out of this. And at some point, strategy hits resistance and then has to correct and find support again. So, but at the same time, you know, I don't know how many shares you have, but like if you have 100 shares, then it's extremely painful. If you've got 200 and 100 get called away, it's not that bad, or it's not as bad. And if you've got 1,000 and 100 get called away, it's like whatever. So yeah, having different size stacks makes shares getting called away feel different too. It definitely hits a lot different. All right, so strategy I already rolled out to 35, and I've got I've got the 150s for May 22nd. These are like completely hosed right now, but like I won't even I won't even begin to worry about these for another 2 to 3 weeks. the price is 225 in 2 weeks, I will probably have to just call it a day. But at the same time, I've got some poor man's covered calls that I could close to pay for it if I need to. And so I think I did a video on the calculations for how many shares to leave uncovered, or how much long call exposure you need to protect your shares. And I can quickly go over that. So let's just say that you have these 200 shares, and like worst case scenario, you think the price could go to 250 by next month. That means that if if I was entering into a position, so let's ignore these. If I'm entering into a position today and I'm selling the 200s, and I think, okay, it could go to 250, then that means that's $50 per share times 100 shares. Was that five grand? So I would have to account for 5 grand per 100 shares to pay and make sure that I don't get called away. If the price is sitting at 250 a share and I got to come up with 10 grand, how much is that? For 40 shares? I would need 40 shares. 10 grand divided by $250 a share. Yeah. I'd have to have 40 shares uncovered. So in order to protect 200 shares being covered, if I think worst case scenario is that the price goes to 250 and I'm selling the 200 strikes, I would need to have 240 shares, so that if it cost me 10 grand to roll them, I could sell my 40 shares for 10 grand and not lose my shares. So you can carry some extra shares that are uncovered, or like the delta on my poor man's covered calls is 64 delta. So that would be like carrying 64 extra uncovered shares. Or these debit spreads is 2 delta. So I would need like 20 times this number of debit call spreads to cover 200 shares. This is 10 delta. So I would need 4 times this. I need like 16 of these 1080s to cover my upside on 200 shares. If you think worst case scenario is 300 a share and you're selling the 200 strikes, then you'd have to come up with 20 grand, which would mean you would need 80 shares. Well, actually, anyway, yeah, you can do the math. But that's the calculations that I go through to say, okay, I have this many shares. How much uncovered shares or, long exposure do I need to protect those if some amazing rally happens? All right, Tesla, I'll be playing the roll game here. These are worth a little something. What are they worth? $1.50? I wonder if these are in profit or if these are still losers. No, they're still losers. All right, nothing to do there. Poor man's covered calls were just rolled a week ago. The good news is these long calls are finally in profit. These are like almost freaking break even. So that means that all of the money, I basically broke even on this long call, and all of the money that I've kept or captured on the short positions for the last 123 days has been profitable. And so, in the main account, my upside was limited by about 30 grand this week. But finally, every single P&L for year to date in all my accounts was finally green. And I think it's the first time this year that every single account has been actually had positive P&L for the year. So, did I miss out on upside? Yes. Was it still like finally I could breathe a sigh of relief that I was making money and not losing money the whole fucking year? Also, yes. All right, but I don't need to liquidate any of these long positions because I don't really have to. Well, let's take a look. I don't think I have to roll. Let's see. There's 1,800 of intrinsic value because of 168 minus 150. So that's $8.50 maybe, or $8 worth of extrinsic value. So plenty of extra extrinsic value in this, even though it's like well in the money. This is a freaking 70 delta short calls. Uh, I mean, it's fine. It's fine for now. CLSK. Okay, 0 DTE on this. Do I even have any cash in this account? My maintenance excess is 80 bucks. This is all fake because this is all being held for cash secured puts. And so well, let's just close this because I may not want to put CLSK back on. I sold some Strive cash secured puts. Let's close that for a whole lot of nothing. All right. This gives me 2,300 bucks worth of cash to play with. Strive should be paying a ton of premium. So this is the most risky cash secured put, out of the money cash secured put that I can sell. Is at the 1550 strike. It's like just below the share price. But I can get paid like a buck for this, pretty close to it, which is 6% returns for the week. That's pretty sick. Now, could Strive drop back down to $10 a share? Of course. But if all I'm thinking about is the premium that I can collect, this is an insane return. What's the the Ivy rate is 2.5. Okay, so Strive must have been so volatile that even with this amount of volatility, it's not even moving the needle for the past year. Safer alternatives to this would be selling like at the expected move or maybe close to it. Sell the 12. The liquidity sucks here though, unfortunately. But this is still pretty good. This is like 5% returns. Could probably capture that over about 3 weeks, maybe half of that in 3 weeks. So percent a week. Best case scenario. Half a percent a week is probably more reasonable expectation. But okay, that only gives me 800 bucks to play with. I don't know what is that cheap even anymore. Bit dear. Yeah, that's even expensive. Yeah. I haven't done any research to find out any other miners that are trading under $10 a share. So I could just do nothing with the $8 or what's CLSK? 12. Let's try it. Oh God, 18. Oh, I've got more stuff to do. Why do I have 7 puts? Okay, that's a ton more money to play with. I got 9 grand to play with, not $800. All right, so this account, I got Tesla, I got Strategy, I got Strive. How many more of these can I do? 9 grand, 1,500 bucks a pop. So 3 grand is two or six. I could do six more of these, probably. Oh, we got a fill. All right, now the premiums that I got paid pumped me back up a little bit, so I got 500 bucks. Probably won't be able to do anything with that. So I could just that's not a huge number to leave in cash, but Tesla really hasn't been running as hot as the Bitcoin derivatives. So what is this worth? This is still 87 cents and my cost basis is 150. So maybe I'll just dollar cost average into some of these Tesla debit spreads with my extra premium. So these are January 15th, 650, 660s. So buy, sell. It's going to cost me 80 bucks a pop. So can I get like 5 of them? All right. So that brought my average trade price down to like 130. I have no cash. Yep. I think this is good to go. Jesus, Sandeep. 400 coming, 3,500 and 35 contracts. Yeah. Yeah, so they're all fully covered and no long exposure, no long calls to soften the blow, I take it. Yeah, you can either bite the bullet and and that's the thing too is with that many shares, um let's say the price did go to 200. That would be $30 a share per contract. So 3 grand times 35 contracts. You'd have to come up with 100 grand. And shares getting called away at 170 divided by 170. You would potentially have to let 600 shares, well, 617 or 6 contracts basically get called away to protect the other 2,900. So that's kind of the prospects that you would be looking at in that scenario. But you can try to play the roll until you're right game as well. Got it. No long calls. What's up, AB? Happy Friday, broski. Yeah, man, your ASST DCA has to look a lot better today. Rolls to next week have no credit currently. Yeah, you'll want to wait closer. So the way that Tasty Trades research indicates is the sweet spot is about 45 DTE to open them, and then best case scenario, you're going to roll them every 2 to 3 weeks. But 40, you had the May 15th, right? Next week will get you into like the sweet spot of being able to roll with also out not exposing yourself to a bunch of gamma risk. Under 20 days to expiration, gamma is going to continue to increase dramatically. But if the price stays under 200, obviously I can't make you any promises, but generally early exercise is only when they get really, really deep in the money. So you could probably pretty easily wait another 1, 2, even 3 weeks, as long as strategy stays under 200. And I think the risk of early exercise is pretty low. What you would want to watch is strategy, if the delta gets over 90, then there's not much extrinsic value left and exercise risk increases. So if they were like, the 130s that I sold last week are like 90 deltas. Well, sorry, that was 20 days out. The 130s that I sold are like 99 delta, 95 delta for next week. So once you start getting over 90 delta, you might want to get a little paranoid about early exercise risk. But as long as there's a bunch of extrinsic value, generally the option buyer doesn't exercise on you. I've only been exercised, the earliest I've ever been exercised was 2 days before expiration. Now Sandeep has been exercised on repeatedly, but he has like the 400 strikes on his puts. I think he said something like that, ridiculous, which has got to be like fucking 100 deltas. So waiting another week, 2 weeks, maybe even 3 weeks is probably fine as long as we're under 200 a share. But just keep an eye on that delta if you're worried about early exercise. And as long as there's a decent amount of extrinsic value in there, it's less likely that you'll get exercised on earlier. And the longer you wait, the more, like, the easier it's going to be to roll out for a credit. So you may have to like tap dance around it a little bit, but you've got plenty of time. Yeah. Let's see. Model is super promising. Super. Just remember stochastic solvers for the data coming in. Roll till you're right, baby, or until you get liquidated. Yeah. Sandeep might be the biggest zero DTE option selling degen we have. Could probably tell you stories. All right, so this is my smallest account on Tasty. Good amount of extrinsic value, bunch of time left, nothing to do. I'm using my premiums that I generate to add these positions. So I'll come back to Tesla if I actually have any money to spend. I just got paid this dividend, so I could exit this for like a 20-cent profit, but it's whatever. Same thing here. Oh, I can almost break even on these things. That's fun. This has only been on for 3 days. Nothing to see here. And then I've got these two positions expiring today. Let's buy them back. That should free up some cash. So, good old Quick Fingers Luke said, always participate in the bounce. I could basically double my money here. And I did take off those positions, but I mean, how many did I take off? Two? Well, I'm going to put one back on. But I should probably hedge this out and book some profits. So I'm going to do that. If Strive crashes again, then maybe I close this call that I'm selling. Now let's see if I can get out of here for the mid price. Probably not. Keep going. Thought that one would fill. This one's for sure. Yeah, it's the fucking bid. Okay. Yeah, so again, that liquidity kind of screwed me because you can see my trade price. It said it was 7, but I actually didn't get filled for 650, so I didn't actually double up. Let's group this. This was long call hedged. So that gives me a little bit of cash as well. That actually might be enough. Let's see. If I put my cash secured puts back on for next week, let's see, one of them is going to cost me 700. So I can actually put 3 of them on. I think I hit the bid like an idiot. Yeah, I got filled way too low. I wasn't paying attention. I didn't click the mid price. So I actually smashed the ask. That's annoying. That cost me about $5 at least per contract. All right. Not much maintenance excess. It says I've got 2 grand in cash, but that does not count for all the cash secured puts that I've sold here. That being said, I guess I could buy 3 more shares of stretch with that maintenance excess. That'll lower my cost basis down a couple of pennies. Won't get paid the dividend for another month, but yeah, there we go. Lowered my cost basis by 4 cents. That's fun. Oh, that's right, because I'm getting credit for margin here. So I can actually buy one more. Oh, 2 more. There we go. Okay. I think we'll leave it there. Sound deep going deep. All right. The 5K account. What do I got expiring today? So my Strive $13 calls got wrecked. I need to send Ben and Jeff a DM thanking them for putting my covered calls in the money. So I either just wait for expiration, let these get called away, or I can just Well, I might not have. Well, this is a margin account, so I can close this, no problem. Anyway, first step, let's just buy this back for a penny. I sold the 13.5 put, got paid 37 cents. Buy them back for a penny. That frees up 13.50 in collateral. These I copy trade with my brother-in-law. I put this one on because I had 1,200 bucks in. Where did this move? Yeah, so this is moving in the right direction, but it's got a decent amount of extrinsic value. No reason to rush anything and close it right away. So to prevent these shares from getting called away, I can use some of that collateral I freed up to just roll this. For next week, I'm going to be super aggressive, just just below at the money strike. And let's probably pay 150. Whoops. 5, 3. There we go. All right. Let's watch this refresh. So 38. Wait, is that updated? 38 minus 25 is $1,320. It's not enough to sell another Strive, but I think CLSK was in that range, right? The frick? Yeah, this might be the closest one that I can get away with. Just going to drop another cash secured put. This will use up most of that collateral. And this is the thing with having a smaller account, is that if you don't own the shares and just bag hold, your cash secured puts start to become more and more expensive. So whereas I could afford 2 contracts in Strive last week, I can only afford 1 contract of Strive this week. And I've had to find something cheaper to trade. Oh, this is right at the money. So let me just go down to here. See if this fills. Oh my God, they are really trying to get every last penny. There we go. All right, shouldn't be any buying power left. Yeah, like 200 bucks. That's fine. Everything else. So this is probably, well, so this was the first 100 shares that my brother-in-law bought. I think his cost basis is pretty low on these, so he's pretty stoked. But we sold to 16 and Cypher's at 17, so losing about $1.80 so far of upside. So we'll see. He finally, after like, I think we started trading, I don't know, somewhere between August and October of last year. And it finally took him until just a few weeks ago to finally get assigned. He's been selling cash secured puts for like 6 months straight without getting assigned. Finally got assigned. And the very first covered call that we sell, and now he's about to get called away. So that's kind of funny. And then if he does get called away, he'll get $1,600 of cash in his account, and we'll find something else to trade. Maybe it'll be Strive, maybe it'll be CLSK, maybe it'll be whatever else is in the price range. Riot's around this price range. Guess I could have sold another Riot put. Oh no, I wouldn't be able to afford that one. All right. Strategy 200 to 10 calls. Oh, so this thing is actually in profit. Now, I was looking at my wife's account and I was trying to exit some of these spreads for a profit, and the liquidity was so bad I couldn't do it. So even though this looks like a winner, look how wide this bid-ask spread is. 140 to 415. Like I might not even get filled at a profit. this looks like I made 50% profits. Not quite 50%. This looks like a 30 or 40% profit. But if I can't get filled at like 225, like that's 30 cent profit. That's like, you know, it's an annoying aspect of stocks like strategy that are not terribly liquid this far out into the future. Tesla, pretty tight bid ask spreads. Obviously, the S&P 500, very like penny wide bid ask spreads in a lot of times. So I could try to close this and see, but I actually wouldn't mind holding this to December and trying to like let this go in the money and collect even more. Because it cost me like, what was it, like $200? Max win on this is 1,000 minus the 200 I spent. So I could spend 200 to win 1,000. So that would be nice. But if I needed to, I could try to exit this for some kind of profit. The Tesla calls, still got a whole year left on these bad boys, and it could happen between now and then. And then, how long have I had this on? This might be break even, or yeah, this is break even. Yeah, nothing else to do here. All right, I think we're good. All right, looks like you guys are just chatting amongst each other. All right. Good luck on everybody treading water on their covered calls. Hopefully you will be able to roll until you're right, or let only as many of your shares get called away as is tolerable and gives you the least amount of heartburn, sleepless nights, and anxiety. But for anybody experiencing this for the first time, this is what you have to be prepared for, and you have to be ready to deal with this when you open the contract. You have to have your plan ready. Do your calculations. Here's the strikes I picked. If it goes to this number, this is how much it's going to cost me. Okay, I will, leave a certain number of shares uncovered to pay for it. Have some long calls. I'll play the roll until you're right game. Whatever your strategy is going to be, get that plan ready before you make the trade, so that when shit like today happens, you're like, okay, fucking deep breaths, count to 10. Let me go back to my plan. This is what I said I was going to do. Now I'm going to execute that plan. And it's a lot less emotional and stress to be trying to come up with a plan while it's happening. So get your plan ready ahead of time. Are you going to roll to your right? Are you going to keep some uncovered shares? Are you just going to let shares get called away? Just enough shares to pay to preserve the other shares. Like, what are you going to do when this inevitably happens? And hopefully that'll stave off an ulcer.